We are going to talk about the volatility band trading strategy. The first question is, what are volatility bands? Volatility bands are standard deviation bands of a volatility index. Different standard deviation bands like 0.25, 0.5, 1, 1.28, 1.5 and 2 are calculated, and these bands are added or subtracted from the previous day's close to get the positive and negative bands. As the volatility index varies on a daily basis, the bands also change on a daily basis. The volatility band factors, high and low, are available from the website every day. These have to be plugged in daily at the market start to get the band for the day. Trading strategy is based on the premise that the index has a good probability of reversal at these bands. The probability varies from band to band. The probability of reversal for the one standard deviation band is 68%, 80% for the 1.28 band, 88% for the 1.5 band, and 95% for the two standard deviation bands. We use this concept for our trading strategy. Please note that this is a visual trading system, and those of you used to mechanical trading systems may find it difficult to use this. AFL for plotting the different bands can be obtained from my website. The AFL plots these bands, and there's also a facility to enter the daily volatility factors, high and low here, and also we can switch off and on the different bands. There's also a facility to plot alerts whenever the index crosses a particular band up or down. You can get an alert. You can switch off and on the alerts. So these facilities are available on the AFL. Let us look at how the volatility band trading strategy worked for the 11th of November. We are using a 5-minute chart here. So the first thing is to enter the parameters for the volatility bands, which is the high and low parameters here. I've already set them here, so let's proceed with it. Before we start, let us set up some rules for the trading. We will go long when a particular bar crosses above a band, because this is the setup bar, but we will not go long at this bar. We will go long if the high of this bar is taken out, and similarly when there is a cross below a particular band, we will go short, but only if on the next bar, if the low of this setup bar is taken out. Now let us see how the day went for the 11th of November. The day opened here, and the index started falling a little, then it went up, and here we have a buy setup. The next bar did not take out the high of the setup bar, so we will not go long here. Of course, this bar takes out the high of the setup bar, so we have supposed to go long here. So we go long here. We will use the volatility band itself as the stop loss. So here the value is 4894. So we'll enter the value here. This is our stop loss. 4894 is the stop loss. But this trade, of course, was stopped out immediately, because this took out the stop line or stop value. Here we get a setup bar, buy setup bar, and the next bar takes out the high of the setup bar, so we'll go long on this bar, and our stop value will be the same, which is 4894. Then the index crosses the next band, which is the 1 point, or rather 0.5 band, so we will move the stop line to the next band, which is 4911. We will enter the value here. 4911 is our stop here now. The stock, or rather the indexes, continue to move up, and at this place it is facing resistance in the 1 deviation band, because one could get out of the trade here because it is not able to cross this particular band, but we are following a strategy where we are using the last band value as the stop. So we are still in trade, and we have another crossover here. The Nifty is taken out the 1 deviation band, so we will move the stop loss to this level, which is 4949. I will enter the value here. 4949 is our stop loss now. Again, the index is facing resistance at the 1.28 band, and slightly it's coming down, but we are still in trade as our stop is in 4949. Here again the index crosses the 1.28 band, so we will move the stop to this band, which is 4972. 4972 is our stop now, but the Nifty is not able to cross the next band, which is the 1.5 band, so it has come down, and here we are stopped out of trade at this 4972 value, so we are stopped here. So we had a good trade about 4972. We entered around 4898, so it's about 70 points earned in this particular trade. The next bar, again we have a buy setup, but then the next bar did not take out the high of this setup bar, so we don't take this particular trade. Here again we have a buy setup, but the next bar takes out the high of the setup bar, so we will go long here, and our stop is 4972. Here the Nifty takes out the next band, which is a 1.5 band, which is 4988, so we move our stop to 4988. Now we are ending towards the day. You can comfortably close it since you are in a positive position. Suppose we assume that we close it in this bar. It's about 5005. So Here again a trade which is about 30 points made here. So overall a very profitable day, except for this one small negative trade. The basic idea behind this system is to reduce the losses to the minimum and latch on to the profits as much as possible. So it's a very simple trading strategy. Hope everybody will find it useful.